So today is Tuesday, 23rd of August, 2025, and as you can see from the title, we're looking at market structure. I want you to picture opening a book in, let's say, Mandarin. Do you think you will understand anything in that book? No. But that book might be the most interesting book you ever have the opportunity to read in your life. It's the same thing as looking at this 4 hour chart right now. Matter of fact, you would even know it's a 4 hour chart if you didn't know the interface, if you didn't know the platform. And that's how market structure is for those who don't understand its language. Yeah, about candlestick patterns, and those are basically the alphabet, but that is basically the alphabet of the market, because no matter the asset you are trading, is definitely going to have candlestick patterns, and candlestick patterns is like the market speaking to you. So in order to understand and have a good sense of what is going on, you need to like capable of reading the information provided to you by the market. And to do that, you need to have an idea of market structure, candlestick patterns, and how they align with each other in order to give you information that you can use in forecasting the most probable move that the market will take in the next hour or two, the next day, the next second, the next month. In this video, we'll focus entirely on market structure, and first things first, I need you guys to understand that the market can only do three things. It will either go up, go down, or go sideways. The market is going up, call it an uptrend. In other words, it's bullish, and in layman terms, we'll say the market is going long. When the market is bearish, selling, or going short, the market is going down. When the market is going sideways, we say the market is consolidating or is in a range. And funny enough, different traders either trade the trending markets, which means that the market is either going up or down, or a ranging market whereby they buy at support, sell at resistance, buy at support, sell at resistance. Personally, I tend to trade breakouts, or you can still call it the trends too. But that's not what we are here today for. Today we are here to look at market structure and how you can identify the trend. Is it bearish or bullish? The best way to understand the trends, as a matter of fact, we'll begin with an uptrend, bullish and a long market. The best way to know whether a market is bullish is to identify whether structure is being broken to the upside, or you can simply use trend lines. But I would prefer you use structure, especially early on, because let's say for example, right here, do you guys see what immediately happens after price breaks out of this structure? Price kept on going up. In terms of trend lines, do you guys see what happens here? Price goes up, comes down, retest the trend line, goes up, comes down, retest the trend line, goes up, comes down, retest the trend line, and presently it's going up. Simple, right? That's an uptrend. That can literally be all, but I'll just give you the lingua. We tend to call, let's say, this part, we'll call it the higher high. We'll call this the higher low. We're going to call this next higher high, call this the higher low, and then this is going to be the next higher high, and same thing here. Higher low. Quite simple, right? And so your objective as a trader trading the trend is to buy at the higher low and sell at a possible higher high. Next thing you realize is that in as much as I want to keep this a very basic video, I'll show you guys something quite interesting. I think in our last video we spoke about, in fact I know in our last video we spoke about engulfing candlestick patterns. You realize that this is an engulfing candlestick pattern here. This is an engulfing candlestick pattern here. This is an engulfing candlestick pattern here. I actually caught this trade on Monday for a dub on my 60k 5%ers phase 1 account. I will break down the trade at the end of the video. So that's it. It's very simple. In an uptrend, you want to look for higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. And you know the trend has shifted when a higher low gets broken. As soon as price goes below this any of these structures, that's when we'll know we're in a bearish trend. As soon as price goes below any of these higher lows, we will know the market has shifted in structure. And it's time to only look for sells. So let me show you guys what the bearish structure looks like, still on the 4-hour time frame. So as you can see here, break of structure to the downside, break of structure to the downside, break of structure to the downside. And for a bearish market, this is a what? Lower low, lower high, lower low, lower high. So one key note I will need you guys to realize is that the lower low is confirmed when it has broken past a previous lower low, and the lower high is confirmed when it is the swing move that led to the break of that structure of the previous lower low to create a new lower low. So as you can see right here, this move led to the break of this structure, the break of this structure. I will advise you guys to look at it in terms of, I will advise you guys to draw your structure from the candle wicks to the next. Like you draw the wicks. That's how I advise you guys to draw your structure. Some people just place their trend line to at either the end of the wick or at the body. Personally, from experience, I advise you to consider it a zone, and in considering it a zone, it's best to use the candle, a wick, the entire wick, to identify structural breaks and strong confirmations. So as you guys have seen, this swing position is what led to this break of structure, and in its entirety you can see how price close to the body. You know what, matter of fact, I'm thinking of my video tomorrow will be on just analyzing individual candlesticks, talking about body, clothes. It'll be a short video, but I think a few of you guys will probably find that interesting. So as you guys have realized so far, based on those bearish and bullish structure, what I've said, for the uptrend, which is going long or being bullish, we want to see a higher high break a previous high, comes down, a higher low, goes higher again. And as I've said, your goal as a trader many a times is to buy at the most probable position where you think the new higher low is being formed to go to the upside and create a new higher high. For the bearish side, your goal is to buy at the most possible lower higher high, lower low, to sell at the lower high to take it to the new lower low. There are so many concepts, but I think that will be it for now. Along the line, I will probably talk about premium and discount zones and all of that. But for now, I just need you guys to understand structure and what your goal is supposed to be. For those of you guys who are interested in trading ranges, this is a range. This is going to be a range. This is a range. So what happens is that for those who trade ranges, right, they tend to like identify the range on a higher time frame, then they drop below on a lower time frame to like bounce back and forth as many times as they can. As simple as that. Personally, I don't trade ranges. I just choose to trade one candlestick patterns. As simple as that sounds. Yeah, just my trading is very basic and simple. So that basically will be it for our video on market structure. And I'm going to break down the trades that I took on Monday and the trade I missed out on today. Quite a funny story. So yesterday, when my alarm rang at 5:56 a.m., the candle that was being formed on the 4-hour time frame was not an engulfing candlestick pattern. So my next alarm rang at 9:56 and I got this engulfing candlestick pattern. My stop loss was 9 pips and I entered at the close. I entered at the close. 9 pips stop loss. It was a very quick move for a 1:1.5. 1:1.5. So that's, I think I still have to learn how to. So that was the trade I took yesterday. Clean 1:1.5 on my phase 1 60k funded account. Simple trade. Then today I woke up at my 5:56 a.m. alarm sound, and the market wasn't giving me an engulfing candlestick pattern. What the fuck is going on here? Anyways, I'll adjust that later on. I'll fix that later on. And so when I woke up this morning, trust me, this wasn't giving an engulfing candlestick vibe, and it was like 2 minutes to the end of the candle close, and so I was like, alright, no engulfing candlestick for the day, for the morning. Probably we'll have one by 10 a.m. Best believe by the time I got to work at 9, or was it 8? I've forgotten. Yeah, probably 8 or to 8, either ways. So as I got to work, I realized that price somehow ended up pushing through on the last minutes, and giving us an engulfing candlestick pattern. So if I was to enter on this trade, my stop loss could have been, I think we have been 8 pips. Let me just be sure. Let me not be. Let me confirm it. That's 26 divided by 3. So that's could have been 8 pips. Could have had an 8 pip stop loss. Could this trade have hit TP or stop loss? I guess we will never know, because anyone who trades knows that many a times spreads can do their magic, But this was definitely a nice trade. I could have preferred taking the risk, finding out for myself. I guess now we'll never know. I have to find him and bring this price to my right. I don't like having price to the left. I don't even know how we got here. So yeah, that's it. So on trading view, looks like we could have gotten the door. So yeah, that's the best of my knowledge. I think spreads could have fucked us up. So either way, so this is what it looks like on the 5-minute time frame. Yeah. And for any of you who has ever read any of my books, you will know that earlier on I realized that the engulfing candlestick pattern is actually a head and shoulder pattern on a lower time frame. So as you guys can clearly see from here, that's it, that's literally the head and shoulder pattern clearly formed. And if you guys pay clear attention, you will realize that that neckline, I simply drew out the zone of the week from the 4-hour time frame, and that's it. That's a perfect neckline. Clean head and shoulder pattern on a lower time frame, man. Yeah. So those of you who complain about a lot of fake outs, what you can do is, if you are a swing trader or a day trader, just go to a higher time frame and look for an engulfing candlestick pattern. Then you enter off the engulfing candlestick pattern for the time frame higher than that which you normally use to get your head and shoulder patterns. So let's say for myself that I'm a day trader, what I do is I look for 4-hour engulfing candlestick patterns, which are 15-minute or 5-minute head and shoulder patterns, which are a clear and direct indication of a change and shift in structure. Personally, I tend to use the 4-hour ATR divided by 3 for my stop loss placement, and I go for my 1:1.5. Based on my statistics, I have 50% win rate over 30 trades, over 32 trades on Euro USD. The last time I did my forward testing, actually live testing, and overall on 3 pairs and 100 trades, I had a 40 something percent win rate. Euro USD was outshining all the pairs, so I just statistic with Euro USD alone. And for those of you guys who love who are not as risk adverse as I am and want to trade this way, what you can simply do is you take that 4-hour engulfing candlestick pattern and divide it by 2, or let's just put it this way, you take my same entry and exit criteria and just give it a 1:1, and I think you probably have your win will probably increase by a few points, who will give you the same results as mine that still goes for a 1:1.5. The only difference is that you probably have a higher win rate than I have, but I believe I'm still going to end up having the same results at the end of a good sample space. Alright guys, so that's all for today's video. You guys should take care. See you guys tomorrow. I won't even cap coming to work today. I was asking myself, man, uploading a video every day is crazy. But anyways, we keep on showing up with fresh ideas and doing our best to give you guys the best content, give you guys the right material, the right information, the right knowledge, because as it said, my people died because of lack of knowledge. So if you have the right information and the right knowledge, you can most likely get the fruitful results and leave. Alright, let's stay together. Let's make that money. Man, this is beautiful. Clean head and shoulder pattern. It's a 15-minute time frame for you guys. and this is my trade of yesterday. Same thing here. If I was to go for a 1:1, I would have gotten my dubs too. So that's it, guys. You guys should take care.